Hi everyone, I'm going to do the recap of the week on the H4. Good week last week. I think most people made money. There was certainly some good opportunities to make money and some crazy stuff as well with the pound yen. It's just a bit annoying because the big spike that we had Thursday evening makes the charts look all weird. So things like that annoy me. Let's just pull up I should have got my chart right first actually. Let's go back again. I'm just going to leave the spike off for the moment because it crunches all of the price action up. So pound yen, last week was really choppy with a sort of nasty double hedge set up, and we had a similar scenario this week. This was my first trade breakout short at the start of the week, and I put my stop over the swing high, and then we reversed and we're in a hedge. And this looked very similar to last week, but the difference last week was we had kind of a big negative hedge. So although this looks and feels bad, your kind of drawdown at the breakout point is only the difference between these two entries. So I was kind of cool with that and didn't let that play on my mind. And then we did exactly the same again. We reversed and then went into another hedge. And I always stop at two hedges because when you've got a hedge within a hedge, then it's indicating that price is doing this. So it's tightening up. So there's no point keep adding trades in this area that are going to get could get spiked out if prices just play in this range here between the high and low. So when I get to 2, I stop, and that seems to work pretty well. Although, at times I stop at 1 hedge as well if I'm kind of busier and I want to be less active, and that works just as well. It just means you tend to have to wait a little bit longer to get to like a positive outcome. So that's where we were, and price did eventually break out, stopping out the 2 shorts, and then setting up a short trade here. Okay, and I had 2 longs running, this one here and this one here. And whenever this happens, you've got that option of, this is where a little bit of discretion comes in on my kind of mechanical system, is that you can close both or one of the winning trades. Okay, because we'd had 2 quite large losses here, I closed out both of my longs here at the point I went short. So now I'm short, and I think I just about managed a little bit of profit out of that scenario. And when these scenarios happen, you have a double hedge in a sort of very compressed movement. If I get out at break even, a small loss or a small win, I'm quite happy with that. Okay, because I know over time it's the bigger moves that give me my profit. So that's where we were, and now I'm going to have to move it along a little bit, and we'll get the spike in. Okay, so here was where I was short from the high, and obviously I'm looking for longs, and they didn't happen. Now, around this point here, because of what had happened on the other pairs, I was in really good profit for the week, and with NFP coming up, I decided to close out for the week. And then obviously we had this big massive spike down on the pound Thursday evening. Now the interesting thing about this is obviously the focus is on this spike, and what I was looking at was, okay, well, let's say I just continued with my mechanical system. Are things like this significant, Unless it was, I'm in a short here, I'm looking for a hedge to set up. The hedge would have come in the morning. My stop would have been mechanically down here, I don't know, 1,500 pips away. And then I had a reversal trade here. So, the net outcome of all of that is I still would have made profit. Okay, And more often than not, these things that we think are significant are not significant. Obviously there will be occasions where they are, but we're naturally drawn to thinking that they're important things, NFP and stuff like that, and often they're not. So anyway, that was the pound yen, and there was a small profit on there this week, which was nice because the pound yen has been difficult recently. Next I'll go over to gold, which was obviously very nice for a lot of us this week. This was our first trade short here, and price just fell away. Okay, and this is the beauty about my system, is when these events occur, when these movements occur, you're in the 99 out of 100 of them. There's a very few occasions where you won't be, but the nature of price movement means that you'll have a valid short when price is moving short strongly, and that's what happened with gold. I held my short here, and then we had this bar close up, and I tell you, holding this short down here when you've got all this profit exposed is one of the hardest things to do, and that's because your mind is telling you that when you've got a big move like this, the most likely thing to happen is price is going to do that. That's what your brain will tell you. Okay, and actually the facts are that is the least likely thing that price is going to do. Price might slow down and then go up. That's more likely. Or price might slow down and continue down, and that's more likely. But your mind will be focusing on this one, which is the one that you don't want to happen. Because you don't want it to happen, it will be what you consider most likely to happen, and that's wrong. Go test it for yourself if you don't believe me. Right, okay, so where was I? So I was holding this, and then in the morning I was looking for a long here, and I can't remember even if I did get in a long there. I would have had my... No, I missed this long setup here. Well, I didn't miss it. I set my pending like that. I used the cross based on what price is now, which gives me a bit of a variable entry. Sometimes it's 15 pips, sometimes it's 20 pips on gold. And I'm quite happy for that to be kind of have a small bit of variance in it. So I didn't get triggered long, and that is wrong. Actually, I'm completely wrong there. I did just get triggered long here. Yeah, I did. I got triggered long. My short-term memory's going. It was my birthday last week, and I'm 40. How old am I? 40 something now, and my short-term memory is obviously fading. Okay, so yeah, I did get taken into a long there, and then I was in a hedge. Then price reversed just by literally 1 pip, and then I added a short. Yes, okay, that's what happened. And my long did get stopped out on this spike down here. So now I'm 2 positions short, and even more so your mind is screaming that price is going to go like this. But it didn't, and I set a pending long here in the morning that didn't trigger, and then price broke down again, and then here at the end of Thursday is where I just forced a closeout of both of these shorts. If I hadn't closed out and I'd continued through the week, which is always like an important comparison to make now, this would have been the valid long on Thursday evening, and we'd already had a hedge breakout here, so I would have had a choice of TPing either one or both of my positions. Either way, if I'd gone right through the end of the week, I would have just taken one more small loss here, and there would have been no difference. Okay, or very little difference, should I say. Okay, oil was a bit tricky, but it kind of came out okay in the end. This was my first trade short, a stop over the high, and then I went straight into a hedge. The hedge just broke out here, and I'd taken a loss there, and then back into another hedge. Then price broke out of this hedge, and we didn't get another setup until here. And here I took profit on my long, stop and reverse, and went short. In the morning we reversed again. I went back into a hedge. Price broke up, which covered the loss here, which was nice. And here's Thursday evening where I just closed it out. So I think it was just about a break even on oil. If I'd have continued, then I would have been long here, wouldn't I? And I would have stopped and reversed here, so that would have been pretty much break even. And then I would have had a small win there, which would have covered that loss. So either way, stopping there or continuing through the week wouldn't have made a massive amount of difference. Only the pound yen, I think I would have won a little bit more if I'd continued through to the end of the week. And that was that. Okay, so pretty straightforward, pretty mechanical. Price moved. GJ probably moved the less, so that made the less profit, and oil moved slightly better, but unfortunately we took some slightly larger losses there, and it gave a few more reversals, so again not much profit. And gold just gave us a very nice strong move, and that's where the big profit came from. So that was it last week. Looks like we're finally getting a bit of movement now, and hopefully it'll continue through October, because September was pretty tough, pretty hard work, and the less of that we have, the better, I suppose. Testing wise, I posted some more charts this week. What was I testing? I was testing if you hold. Yeah, let's cover this, because some people were interested in this. So I ran some back tests where let me find an example. So with all the back testing I've been doing, what I've been trying to do is kind of explore all of the different ways of managing the trades. And what I'm trying to discover is if you could use any of the possible options to manage trade. Okay, so say always stopping and reversing, always hedging, taking one hedge, then stop and reverse, taking two hedge and stop and reverse. If all of those have a positive expectancy, obviously some will be better than others, but if they all generally work, then we know that we can kind of use those kind of basket of options in a discretionary way, and be fairly confident that it has a positive expectancy. So if you like, I'm just kind of sort of trying to stress test things and seeing if we can kind of pull the management and exits around and still have a positive expectancy. So anyway, what I did on the test was I took a breakout here, and then I just waited for a hedge to set up. And when a hedge set up, I held it all week, okay? And you can see here, there was just two trades, the low and the high of the week. And then I followed that through and did the same next week. So this was the high and the low, and then the high stopped out, and this was the high and the low stopped out, and then this was the low, and then that stopped out, and then down to the end of the week. Okay, and I was just doing that, and then if I got to the end of the week and I had two surviving highs, then I took profit on them. Okay, so you had 1, 2, 3, this trade's not this trade's at break even. So you had 4 losses there and 2 big wins. So in effect, what this is kind of like you would be in trend trading. You have a lot of small wins and a few big, a lot of small losses and a few big wins. Okay, so it's kind of a stretched risk to reward version, mechanical. And I just ran that to see if that would be profitable, because you'd expect it would be. It's like trend trading where you have some big wins and lots of very small losses, and over time that should make profit. And of course it did. There were good time. There were good. I posted a few years of testing, and clearly there was some really, really good periods on the pound yen in 2016, and some not so good periods, just like you'd expect to see with trend trading. When trends occur, you make a lot of money, but you have to go through long periods of not making any money at all. And again, it was just looking at this core idea of just taking breakouts and managing and exiting trades when price changes direction. Really like the simplest way of trading with no analysis, just the simplest change in direction, entry, and a mechanical system with no discretion. Really it's as much as kind of a confidence builder in the core system as saying, this is a great way to trade. And perhaps for a few people, it will kind of give them a few ideas where they can come up with their own way of trading, trading with these breakout entries and management techniques. So that was quite interesting. The files are on the Facebook page if you want to have a look at them, and if you can't find them, then just leave a message and I will send the PDFs over to you. So that was it for this week. I will see you all next week. Have a good weekend. Cheerio.